Yeah, last week was not about an event-based sell-off or a news-based sell-off or something happened in the world somewhere which led to this kind of a sterling stampede.
But where is that Santa rally and things that one is talking
Santa
about?
came
It's
early.
gonna,
Santa came early.
But
Global
went
warming.
back already.
Yeah.
Global warming.
To the North Pole.
Global warming. He
Yeah.
came early in the December.
Yeah.
And everything is changing. And the Santa has decided to come early before the snow melts. So, no, see, we tend to connect dots with these cute terminologies called Santa rally, Diwali rally, New Year pigs, Diwali Dashera Dhamaka. It does not work like this. But look, last week's price action was not very encouraging. And it was not encouraging because it was not because of news. It was not because of macro. It was pure, plain Jane profit booking. Just when it appeared that 2024 would close on a bang, last week's price action has pushed the bears back. Hopefully, we have a lot of green on the screen. Thankfully, we have indications of a gap up start, but last week's price action cannot be taken lightly. That means that the bounce what we saw in the early part of December, that clearly seems to be getting challenged. And for me, that in a sense is important to point out again, that hopes of a grand close for 2024 now clearly lies on a back foot until unless Santa decides to take a U-turn and come back. Looks highly unlikely that we are in for a sharpish we are in for a grand close. And this in a sense is a big departure from what the market positioning was last Monday versus now. So there is a big departure both in terms of trends, mood, momentum, and also opinion.
Yeah, and that's how the opinion is shaping up at the moment, because if you look at the global screen as well, it's been very topsy-turvy over the last couple of weeks. Dow was coming off that biggest 10-session loss rally since 1975 thereabouts. But for what it's worth, overnight at least there was a bit of a green on the screen, both in terms of what futures are suggesting and the way the US market shut. Part of the reason was the PCE data, or the inflation data, which actually came over the weekend. And if you look at the core PCE, which is a preferred mode that Fed really tracks very closely, it was up just 0.1%. It's the smallest gain that we have seen in 6 months. In fact, if you look at the annualized number coming in, it came in at 2.4%. It was better than the estimate of 2.5%, and that really eased the sentiment a bit, and that's why we saw green on the screen. Yes, the 2.4% is still higher than that inflation rate of 2% that Fed had set for itself, but at least it's coming off a bit, and that's been the commentary coming in for a couple of Fed members as well. So all of that augured well for the US markets, and that's why perhaps we have a bit of a green on the screen around 23,800 is what we are suggesting that we are likely to open up with. But Nikunj, it's been quite, we haven't been in sync with the global markets per se. I mean, in November, they were rallying all out and we were on the back foot. It's only from November 21st we started rallying. But in December, Dow was on a, down streak. At that time, we were gaining. So it's converging a bit, the relative performance.
So Nisha, what has changed is that FIs have started selling again. If you frankly ask me in terms of the global market narrative, it's not about inflation, it's not about Trump, it's no longer about how the 10-year bond yield is likely to move. I think it's pretty much been status quo in last 8-10 days. And yet the global markets and Indian markets in a sense, Indian markets last week in a sense have not really moved as per the script. So you cannot blame it on the global setup, because globally I don't think volatility is a concern, because after that Fed meeting, volatility on Thursday and Friday has got crushed. Now you can put this entire Fed communication last week as to one of the big reason why we saw that mid-air turbulence, but Thursday, Friday that has not translated or snowballed into some kind of a domino effect. So I would say globally things are stable. For Indian markets, things are a bit shaky, and that's the way how it is. What do you do in this market? I think, I don't think you want to be on the bearish side. You still want to be on the long side, which is that when you get a week like we got last week, maybe a little bit of decline here or there, 1 or 2% here or there, I think you should start buying, because this market in a sense has rewarded if you've been patient and if you've been buying on the decline. I think if you get another 2-3% decline before the year end, then you should start buying into stocks rather than running away from it.
If you like this video, then like, share and subscribe to ET Now.